Welcome back to the channel, traders. Today, we're diving deep into a fascinating stock that recently popped up on our advanced scanners, CELU, ticker symbol CELU. We're going to break down exactly why it caught our attention, analyze its technical setup, and outline a potential trading strategy. But first, a quick word. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, let's talk about CELU. This is a microcap company operating in a currently undefined sector according to our data. With a market cap in the microcap range, it's a stock that can see significant volatility if and when liquidity enters the market. Understanding its size is key when we look at its trading characteristics. Now this is where it gets interesting. CELU triggered multiple powerful screening strategies, indicating a confluence of technical conditions. The first was Paloma Once, our pre-breakout squeeze strategy. This looks for low ADX readings, or average directional index, an indicator that measures trend strength, currently indicating a tight consolidation range. Price was above the EM at 20, the 20-period exponential moving average, meaning short-term momentum was positive. For most stocks, this strategy anticipates volume beginning to expand, signaling a potential breakout from this tight range. Next, dip and top layer or strength from the lows. This strategy identifies stocks showing resilience after a period of weakness. It requires low ADX consolidation, price above the EM at 1T, and the RSI at the relative strength index, a momentum oscillator above 50. In liquid stocks, it also demands volume above its 30-day average, signaling renewed buying interest. CELU also paired as a harmonic formation Adelari, a harmonic pattern candidate, suggesting us in a bounce retracement zone, a technical pattern often preceding a reversal or continuation, supported by moderate RSI and relative volume. Finally, dip elmas, or diamond dip formation. This strategy targets pullbacks within a bearish 3-month trend but with a positive 1-month recovery, ideally showing buy-side volume dominance. It's crucial to note here that while the price action and indicator values for CELU met these criteria, the stock itself currently shows zero trading activity. Today's volume is 0 shares, and its 30-day average volume is also 0 shares, resulting in a relative volume of 0x above average. This means the underlying technical patterns are present, but the essential ingredient of liquidity is entirely absent right now. This is a pattern recognized, awaiting real-world volume confirmation. Technical analysis deep dive. Let's zoom in on the specific confirmation signals. Zoom in on chart. Our scanner confirmed CELU's setup through the VWAP and EMA alignment gate. In simple terms, this means that when the signal triggered, the stock's price was trading above its volume-weighted moving average VWAP, indicating buyers were in control when considering volume. The trend strength, measured by the ADX, was above 18, suggesting a real trend was forming, not just random noise. The RSI, our momentum gauge, was in the healthy momentum zone between 45 and 68. This is the sweet spot where momentum has started but isn't yet overextended. All these conditions align simultaneously, which our filter uses to eliminate false breakouts in active stocks. Again, for CELU, this implies a potential structure, but the critical volume component is entirely missing in current data. Imagine a stock that has been quietly building strength, coiling like a spring, while volatility has dried up. This is what the Paloma Once strategy identified in CELU's structure, anticipating that once volume returns, it could explode upwards. For dipped and top layer, picture a stock that has found its footing after a decline, with buyers slowly and steadily regaining control. As the underlying narrative this strategy found in CELU's price action and indicator readings, suggesting a potential move higher from its current lows. The harmonic formation Adelari strategy tells us that CELU's price is currently sitting in a sweet spot for a potential reversal or continuation, based on its specific Fibonacci retracement levels. And finally, the dip EMA strategy paints a picture of a stock that has suffered but is now showing signs of a turnaround, with an emerging positive recovery in the shorter term against a longer-term bearish trend. Given this unique scenario, our scanner has identified precise key levels to watch should liquidity return to CELU. The scanner entry signal price is set at 9,939 cents. This is where the confluence of our technical indicators signal potential upside. To protect capital, the stop loss level is at 9,889 cents. This acts as our invalidation point. If the price drops below this, the setup is no longer valid. For profit taking, we have 3 targets: T-point at $1.436, TP2 at $1.933, and TP3 at $1.1430. Each target is strategically placed at potential resistance levels. This setup presents an incredible risk-reward ratio of 9.94. This means for every dollar risked, the potential reward is nearly $10, an exceptionally favorable ratio that our scanner prioritizes in high-probability setups. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For CELU, the absolute critical factor to watch for is the return of significant volume. Show volume bars currently with 0 shares traded, any price movement is meaningless. We need to see volume surging well above its 0 share average for any of these patterns or levels to become actionable. Look for a sudden increase in shares traded, ideally hundreds of thousands or millions, accompanying any upward price action. Conversely, if volume remains at 0, this setup remains a theoretical pattern with no actionable trade. If volume does return and price action moves below our stop loss, the setup is invalidated. So, CELU presents an intriguing theoretical setup, but it's a powerful lesson in the importance of liquidity. This is a stock to put on your watch list, not your active trading screen, until real volume confirms the patterns our scanner has identified. What are your thoughts on CELU? Have you seen patterns like this in illiquid stocks before? Let me know in the comments below. Don't forget to like this video, subscribe for more in-depth stock analysis, and hit that notification bell so you don't miss our next deep dive.